Welcome to the first Block Fuel podcast. We are joined by Graeme Moore from Polymesh. So we'll be diving into, of course, what Polymesh is. You have quite the interesting background. So for those that don't know you, I'd like to always start off with who you are. I was checking out your LinkedIn. You had worked at Cushman and Wakefield. You started in, I believe, somewhere in the tax realm. Then you went into be the creative director of Spartan Race, the author of B is for Bitcoin, and of course, have now entered into the crypto sphere, working and leading Polymesh.
For sure. Yeah. Thanks for having me on. First episode here for you guys' new show. As I mentioned, I've done a bunch of different things. Cushman Wakefield was during my university days. So pretty much my entire family works in real estate. Something I was maybe going to do, but I got more excited with finance. So started working in finance as kind of my first, real job after university. Got my CFA level 1. Thought I was going to go down the route of being an investment advisor, but just got really bored with it pretty quickly, and working in an office and, trying to earn people 8% on their money instead of 7% was just something that wasn't really getting me excited about going to work anymore. So I actually left that job. And pretty much right when I left, I found out about Bitcoin. And I say found out about Bitcoin, I mean, actually kind of started to understand what Bitcoin was. So I'd heard about it before, 2013, 2014, but back then I was so excited about finance and investing, and I loved reading about Warren Buffett. And Warren Buffett said Bitcoin is bad, and then eventually he said it was rat poison. So I said, yeah, Bitcoin's stupid. Why should anybody buy this thing? It's a penny stock. It's a scam. It goes up and down, and there's no real value there. So I just kind of disregarded it. But then I actually, after I think I left my job in finance, I think Warren Buffett's cloud kind of was no longer hanging over my head. And I started to watch some actual videos and read some actual information about Bitcoin. And so what I realized is, no, this is a very exciting technology transformation that's, on par with what the internet has done for communication and information. This is doing the same thing for value and money. And so realizing that Bitcoin was an actual technology innovation and not just something that goes up and down on a chart that people are betting on in terms of price, that's what got me really excited about it. So yeah, as you mentioned, I joined Polymath actually as a company first. That was my first real job in crypto after helping people buy and safely store Bitcoin. And we were talking a bit before we started recording about some crypto collapses, and one big one in Canada. So I'm originally from Canada, was Quadriga. And so Quadriga was an exchange that was the biggest one in Canada, and, it went bust, and the founder maybe died, maybe didn't die. We've seen that about Gerald Fund. And all the crypto is gone. And so helping people safely navigate that and learn how to use a ledger wallet and store crypto safely was really rewarding for me. But yeah, so first real job at Polymath, where we were the first company to start building anything in terms of compliance infrastructure on Ethereum for securities. And so at the time, it was early 2017, and people had started creating these ERC20 tokens and doing these ICO things. And we said, okay, cool. People are selling tokens, but these tokens don't really have any claim to any real underlying assets. So yeah, you can, maybe eventually they will, or you can share some revenue with someone, or functions like a governance token for a DAO. But what we said is, this would work really well for stocks and for bonds and derivatives and real estate and for actual ownership of anyone that anyone can think of. But when you get into the world of securities, there's a lot of compliance criteria that no one had thought about building on Ethereum. So anyone could send any token anywhere, anytime, do anything. And that doesn't really work from a securities law perspective. You could potentially have people from North Korea hold equity in your company, which for, a lot of jurisdictions around the world, that's a big no-no. So that's what we started building on Polymath. We built the ERC 1400 standard, which became the most widely implemented standard on Ethereum. Then on top of that, the Polymath Token Studio, where over 200 assets were created on Ethereum. But what we kept noticing time and time again is we had some great adoption, but it was billions of dollars, and there's quadrillions of dollars of securities potentially if you include derivatives. And so, why wasn't the adoption there in terms of what we thought it should be? And it was because banks didn't like using Ethereum for this use case. We kept trying to convince them, use this public permissionless blockchain, use this technology that we've created, but they're just like, you know what? It's still a little bit too scary for us. We can't use it. There were issues with settlement, issues with identity, governance, compliance, and confidentiality was a big one as well. So we actually started building our own blockchain, and that's what Polymesh is. So Polymesh is a layer 1 blockchain built just for regulated assets and financial securities. So the Polymesh Association was created, and that's where the IP for the Polymesh blockchain lives. And the Polymesh Association is a not-for-profit entity, really built for expanding the Polymesh ecosystem. So, me and a few others from the Polymath team, we left to go to the Polymesh Association, and that's what we've been doing now for 2 years.
So B is for Bitcoin. You are the author of. Is this your first book you've ever written? And I would love just to high level learn about that.
For sure. Yeah. First book I've ever written. So B is for Bitcoin is the first ever ABC book about Bitcoin. So it's designed for kids, but adults are the ones who buy books and they're the ones who are excited about Bitcoin. And so really what was happening in terms of the idea of that and why I pursued that was my sister was having a kid. So I had a niece that was on the way and I was thinking, okay, do I want to read to her? A is for apple, B is for ball. Like not really, everyone's done that throughout the course of history. I wanted to read to her. A is for altcoins, busts and booms. B is for Bitcoin, went boom. And so I wrote B is for Bitcoin. I started it in 2015. It was just a note. It's just in my notes folder on my phone and kind of finished it and was like, okay, cool. Yeah, maybe I'll do that someday. And then in 2018, I was sitting in the Polymath office and one of my buddies goes, why don't you just make that book already? And I was like, I don't really know how. And, maybe I have to find a publisher and I'm not going to be the one who illustrates it. And it was like, just go on Upwork right now, hire some illustrator and he'll have it down in a month. And so I did that. It was super easy to self-publish it. So yeah, if anybody has any book ideas that you're thinking of doing, just go do it.
I was going to say we have a 6-month-old. So this is something I need to get in front of them ASAP so that
definitely
needs to start speaking.
Yeah.
Before we get deep into Polymesh, we'd love to hear kind of like, I guess how, certainly B is for blockchain or Bitcoin is Bitcoin focused. Like, how do you balance like getting into like doing the permission blockchain from starting with Bitcoin, which I think is a journey that most people understand or, have in their careers is okay. Like I understand Bitcoin, but then like, why do we need permission blockchains and how do we make the corporate entities that Bitcoin's trying to get away from actually see the value in this?
Yeah, it's a very good question. And it's almost like one that a lot of people kind of grapple with. It's like Bitcoin is exciting because anyone can do anything at any time. But while I'm excited about that, I also live in the real world and understand that governments exist and that securities laws exist and that a bank that has trillions of dollars of their clients' assets, they're never going to go on their own. Even if it's a slight gray area, they just simply will not do that. Mm-hmm. And so the thing about Polymesh is right, we were building on Ethereum and they said public completely permissionless blockchains aren't working for us. But it's even more beyond that. I mentioned governance. And so a big thing for banks that they saw, and I think Ernst & Young put out this paper maybe a few years ago, and it was after the DAO fork of Ethereum and Ethereum Classic, where let's imagine you have $1 trillion of your clients' assets invested into stocks and they're all on Ethereum, free DAO fork. And then after the DAO fork, where are the real securities on? Are they on chain A or are they on chain B? Mm-hmm. Do you have to pause trading for 6 months until Vitalik tells you for sure which one is the real one? Do you have to wait for the mining chain power to go on one chain versus the other? Do you wait for the underlying ETH versus ETH class token to go up or down? And so those concerns are really big for institutions as well. So on Polymesh, there's always one canonical version of the chain. Of course, someone could rip the open source code and they could build their own, Polymesh too, but there would always be Polymesh. Whereas on Ethereum with the DAO fork, it wasn't certain at all which one is Ethereum, but pretty much what happened is Vitalik Buterin said this one's Ethereum. So everyone said, okay, that's Ethereum. That's just a governance issue that banks simply cannot deal with for regulated assets. Another big one is settlement as well. So on something like Ethereum or Bitcoin or Solana or whatever, take your pick. If I find out your address, I can send you anything I want and you can't say no. That was a huge issue for banks. So when Visa announced about a CryptoPunk, I sent them some tokens. People sent them NFTs of illicit photos. And so now Visa has to, what do they have on their balance sheet? A photo of a penis like that is insane. Yeah. And so that's just something that banks look at and they go, okay, we just can't use this in any meaningful way because what that settlement type of infrastructure allows for is unknown, unquantifiable potential tax liabilities. And so I could send Visa $5. Now Visa has to account for that, like on their quarterly statements and report to their board and say, we don't know who 0123 is, but it's Graeme and Graeme sent them $5. Or maybe I was in North Korea when I did that just because I wanted to mess with Visa. And so a bunch of huge issues. So on Polymesh, what we said is, okay, that's not how settlement works in the traditional finance world. What banks and custodians and broker dealers are used to is all parties in a trade must defer settlement instructions before settlement can take place. So both sender and receiver and potentially other senders and receivers, if it's a multi-leg settlement, they all have to say, yes, I want settlement to take place, bank settlement to take place. So there's just a whole bunch of little strange things like that not everybody is aware of in terms of how, the traditional finance world functions, where when Vitalik and team, obviously, thought up Ethereum in 2014 and they created a blockchain, they didn't really think of that. But we, after building on Ethereum for 2 years, said, okay, here are the issues with Ethereum for this one use case. Let's see if we can make a better blockchain.
Yeah, I guess quick follow-up question to that. So I guess does it become a selling point for you then when, Tornado Cash, the big mixer was sanctioned by the government, and then you have people that are using, these tiny to Tornado Cash Bitcoin and they're airdropping it or any other assets and airdropping it into Jimmy Fallon's wallet and other celebrities' wallets. So everyone is tainted by this. That seems like a really good selling point for you guys.
It is, yeah. And I mean, that was a huge thing that, banks saw that and went, oh no, that's scary. Personally, I think it's really, it doesn't make any sense that you can say if some Ethereum went into Tornado Cash and it came at the other side, it's automatically tainted. That in my opinion doesn't make any sense. The United States government saying that a specific smart contract is bad and anything that goes through it doesn't make sense. And I think, after the Jimmy Fallon spray and everyone's wallet gets sprayed with all this little bit of ETH, I think they kind of walked that back, or at least they're not enforcing anything. I don't think they arrested Jimmy Fallon after that. So, I think that's less of a huge deal, but again, it's a huge question mark and banks do not like those question marks. And so for us to say, that cannot happen in this environment, that just makes them a lot more vengeful.
How far away do you see? Because I've seen this shift, right? We were joking before we started recording about it's no longer just going to be these pictures of cats when it is moving more towards institutional. Can you talk more about this concept of like the public permission blockchain and why that's important as you go through towards institutions?
For sure. We talked about the settlement. We talked about the governance. I think identity is another key point where banks, just look at something like Bitcoin and Ethereum and they go, putting $1 billion of, one of our closest clients' debt instruments on this blockchain, they just get kind of nervous. And so one of the reasons is, on Ethereum, anyone can do anything. On Bitcoin, anyone can do anything. On Polymesh, all the users have to actually pass a KYC process to use the blockchain. So that's what banks are used to. That's what custodians are used to. So it's giving them more comfort from that side of things. And then the other big thing that we heard from a few very large financial institutions was issues around paying gas fees on public blockchains. And so I think that's slightly changing now, the perception, but here is the issue that they brought up is, let's say I trade $100 million bond, and I game it on Ethereum and I pay $5 in gas fees to do that. What if that block gets mined by a miner in North Korea? Now, let's say it was JP Morgan who traded that bond. JP Morgan just sent $5 directly to North Korea. So that's just a huge concern for them, or the Lazarus Group, which is in North Korea, or, Al Qaeda or whoever, take your pick, or even someone in Iran that they're not able to deal with, or even just someone who's not KYC. They don't know. And so that aspect really concerns them as well. And so on Polymesh, all of the node operators, so it's a proof of stake blockchain, so all the validators called node operators. All the node operators are licensed financial entities. So, they might be a broker dealer, they might be a custodian license, they have some type of financial license that allows them to engage in capital markets. And so, again, it's all about how do we get banks to issue their first $1 trillion of assets on chain? And we think it has to be a public permission blockchain with these types of guardrails. This stuff always takes longer than you think, but, I'm Canadian by birth. So, we always talk about hockey sticks. And so, we're just almost at that, inflection point where we see tiny bit of growth, and then straight upwards. I think a huge thing that recently happened. So you mentioned BNP, so that was really cool. So BNP is I believe, 9th largest bank in the world, 5th largest outside of China, maybe 4th largest outside of China, one of that, but, huge amount of assets under management. They use the ERC 1400 standard that we created on Ethereum, our team. And so that was really cool to see. They did I think it was a green bond from an energy company. So yeah, very cool to see that kind of adoption. SocGen has done something as well. SocGen, I actually think as well, interacting with the MakerDAO protocol, and tried to allow their bond to be used as collateral in MakerDAO. So, it is happening. The questions and the comments that we were getting from banks 2017 to now is night and day. Like, you wouldn't even guess it's the same people at these organizations, just their understanding is completely different. And one really positive and encouraging thing that I think I've seen is they understand the bifurcation of different things in crypto. So originally in 2015, 2017, everything was the same. Bitcoin equaled Ethereum, equaled NFTs, equaled smart contracts, equaled DAOs, equaled hacks, equaled scams. Everything was the same. It was all lumped together. Now they clearly understand what's happening. There are regulated assets being issued on blockchains like stocks and bonds. There are DAOs, there are NFTs, there are good NFTs and bad NFTs. There are protocol tokens. There are, lending platforms, DeFi platforms, DEXs. All of these things, they're starting to understand and make much more sense of the landscape, and that there's actually innovation happening in all of these different areas. And so I think that's been a really encouraging thing to see. And then the most recent news has been BlackRock. That overshadows, I'd say, everything. Fun fact of the day, I was the first person to tweet the filing on NASDAQ, and then I was the first person to tell CoinDesk about the surveillance sharing agreement. And so everyone is now talking about the surveillance sharing agreement. Like I told the world about that, and now all anybody cares about is what
you're the Adam Schefter of crypto.
I tried for a day, right? But then everybody else stole my thunder a little bit after. But so I think that's huge, right? Largest asset manager in the world says our clients should be able to hold this asset in a vehicle that we offer, and so that is so huge. And I think people are still somehow underestimating the impact of that. Where when BlackRock says something's okay, like that is huge, and I think we're going to see a lot of movement now, with more institutions going, okay, hold on. So BlackRock says it's okay. Fidelity says it's okay. All of these other organizations say it's okay. JP Morgan owns part of Consensus, which is MetaMask. So I can actually use a wallet, because JP Morgan says it's okay. I think we're going to see a huge amount of adoption in the very near term.
Now, I always wondered about this, just knowing that crypto is 24/7, right? How do the ETFs then mitigate, a big spike or a big drop when the markets close? Do you know?
Yeah. So I mean, there's a lot of after-hours trading that goes on now in markets. And I mean, it's kind of the same thing with gold, right? Like people are still selling their gold at a pawn shop on Saturday, and then, that potentially reflected in the price on Monday or not, depending on if it moves or not. But, on that, one interesting thing that I love talking about is, the SEC's position about not allowing a spot Bitcoin ETF because there can be manipulation in the Bitcoin markets. Right. When the price of oil is literally controlled by a cartel that we all know by name called OPEC.
Yeah.
So their oil ETFs are fine and they're allowed because, OPEC is a thing that exists, but it's a literal cartel that decides the price on a day-to-day basis. But that's fine. But Bitcoin hasn't been fine. So I think that's, again, why that surveillance sharing agreement is so important, where what happened with all the spot ETF filings prior was everyone just said, oh, the SEC hates us, boo-hoo, let's just keep putting the same application forward. BlackRock looked at the SEC's position and said, fine, we believe you. Sure, let's say there's manipulation in the Bitcoin market, but do you trust NASDAQ to say that this data is fine? And so that's, why a lot of people are now saying that this might finally be the first one that gets approved from a spot Bitcoin ETF perspective, because they're just taking the SEC at their word and saying, sure, there's manipulation. Sure, maybe. But if NASDAQ says there's not, then you can't really go against NASDAQ, who, has a ton of ETFs, has a ton of stocks trading on it, every single day.
Mm-hmm. See, Graeme, you mentioned you were starting out in real estate. I was a real estate major in college, and dad, grandfather, all in the space. And now you're, in hard assets, but a different type of digital hard assets. We'd love to hear how does that translate over? How's that different concepts translated over into what you're doing with Polymesh? As well as we'd love to hear, I think a lot of listeners don't fully understand how a tokenization process works. Could you describe maybe an ideal project cycle for you? Meeting with a bank, what that looks like from a project to idea to getting deal signed to doing testing to get that launched.
Yeah, for sure. So I think it has been a nice crossover, when potentially one of the huge use cases right now is real estate being tokenized. And I think it's nice when people, when they go on my LinkedIn, for example, and they see Cushman Wakefield, they go, oh, okay, cool. Maybe this person knows at least a tiny bit. And, when they use some terms like NOI or whatever, cap rate, I'm not going to have my eyes glazed over and I'll roughly understand about what they're talking about. And so how the process works for something like that. And so we've worked with a number of different companies to do that. Some that are hopefully going to be announced very soon. And so the process is very similar to the traditional process. So I think one of the common misconceptions about tokenization is that it's a crazy new thing that's never existed before, and real estate owners or banks have no idea how to do it. But all of the paperwork is essentially the same. Figuring out what type of offering you want to use, whether you want to do an exempt offering in the US or an offering outside the US to offshore investors. Who do you want to be able to have access to this asset? What kind of promotional materials can you do? How can you sell it? All those kinds of things are essentially the same. What's different is a lot of the back office stuff. So instead of using, Parta, for example, to take care of, who owns what stocks at a startup or something like that, or using one of the giant conglomerates that have a back office somewhere, you use a token on the blockchain. And so that's really where the difference comes in, is how do you want to keep track of who owns what, and what software do you want to use to enforce compliance criteria? So traditionally, to enforce compliance criteria, a company just calls a transfer agent and says, hey, transfer agent, make sure that we don't get sued by the SEC, because the transfer agent is ultimately on the hook. And you can still use a transfer agent in the blockchain world. And there are transfer agents that are currently operating on blockchains, and it's actually much easier for them to do so. Because in the past, there might be pieces of paper sitting in a filing cabinet somewhere with some lawyer, and one of your investors decides to sell to someone else, and then the lawyer might sign off on something, but maybe they weren't allowed to based on some type of lockup that they had. But maybe the transfer agent okayed it, and they have to go back in time and then change the transfer. And all that kind of stuff can happen when you're dealing with a paper-based system where human beings are involved. The cool thing about tokenization is you can just pre-program all of those compliance rules. And so you can say, 0x123 ABC is John Smith. He's from the United States. He's locked up until this date. And it's not able for him to move tokens. And so that for sure the compliance rules can be followed up to a certain lockup date. You can also implement volume transfer restrictions. So all of that stuff can effectively be done very simply. But, getting back to, how do you work with a company? A company doesn't even need to talk to Polymesh, even if they want to issue an asset on Polymesh. Same way they don't call Vitalik and issue an asset on Ethereum. They don't necessarily call us. That being said, a lot of companies do want to call us. They want to talk to us. They want to better understand the Polymesh blockchain. They want to better understand how to work together. We might be able to, introduce them to a company that can handle something like transfer agent services if that's something that they want. But really, it comes down to them wanting to create the asset, doing the same paperwork they did before, and then potentially using a company like Polymath, who provides services to keep track of shares, or someone else like DigiShares is another company we work with on the Polymesh blockchain. Or if they just want to do it themselves. If you're doing the $1 million offering, and this is something that I really find exciting about tokenization, is smaller offerings are going to become much more feasible, because you might be able to do something outside the US. You might be able to get some type of exempt offering type, and you might be able to do something where, doing $1 million offering previously might not make sense, because listing on an ATS can cost something like $25,000, and you might have to pay $10,000 every month. And so we've heard those kinds of quotes from ATSs in the legacy world, but now you could just issue an asset. You can, of course, still, hire your legal team and hire a securities lawyer and make sure you do it properly, but issue a token for $100 and then have it trading on a DEX compliantly, because the blockchain software itself is keeping track of who can and who cannot hold assets. And now it's trading on a DEX, and you have an asset that's trading 24/7, 365 anywhere in the world compliantly, cross-jurisdictionally, where you're paying essentially $0 in upkeep. So that's one thing that's really exciting, is people tokenizing HETs, people tokenizing an apartment building, people tokenizing these small bits of real estate, where previously it was infeasible because it cost so much money from a legal overhead and administrative overhead standpoint.
So we talked a little bit about regulation. Polymesh just had a report that highlighted some of the leadership within APAC. So like South Korea, Singapore, Hong Kong, in terms of like their regulatory developments. At the same time, if you look at the news, you see a lot of the US regulators running away from the crypto space. So there's a lot of uncertainty here in the US. And at the same time, you got BlackRock. So can you just touch on a little bit of some of those highlights from APAC and share how Asia is helping perhaps the US with some of this regulatory shakeout here?
Yeah, I think the main takeaway is Asia and those three countries specifically that we highlighted in the report, Hong Kong, Singapore, and Korea, they're actually doing things on the legislative side. And so that's been really the huge issue that's really plagued America right now, is that the SEC has, and Gary Gensler has said some wild quotes about this, almost kind of like anything the sun touches is mine and things of that nature, where the problem is because Congress hasn't made any specific legislation yet on the token side of things, Gary is just able to, in his mind, say, all of these things are securities, so they're all under my purview. I'm assuming we probably don't think that's the case. Bitcoin seems like a commodity. Ethereum seems like a commodity. A lot of these tokens seem like commodities. And some of them seem like something else that didn't previously exist. So trying to shove every single crypto asset into this one specific active, whatever it is, 1933, just doesn't really make a lot of sense. And so the key takeaway that we learned in our research was that, Hong Kong, Singapore, South Korea, they're actually issuing legislation from the government and not relying on their securities regulator to assume everything is under their purview. And so it's been very positive, and I think we'll start to see a lot of companies do a lot more asset issuances of those jurisdictions rather than the United States until Congress passes something that starts to make sense and provides some clear rules of the road.
All like regulations are dynamic topics. Are there any recent dynamics in regulation you would want to weigh in on? I know you mentioned around this surveillance sharing agreement you first did on Twitter. What's going to be like, do you think it's going to be the next like headline that you're going to tweet first on Twitter?
And just to piggyback on that question a little bit, Jody, we mentioned BlackRock and like we just saw PayPal came out with a stable coin. Do you think some of this corporate news flow will put added pressure on some of the regulators as well?
I think it is, right? And that's, I feel like really what you see with any kind of new technological innovation. And so one thing I love talking about, in the 90s, the United States government tried to ban encryption. They tried to say that encryption should not be allowed. And they actually tried to say that using encryption on the internet was exporting munitions. So you would be defined as a terrorist for using encryption on the internet. Like that was something that like you can actually go look it up. It's insane. Like a lot of people know about this, but you can go look it up. The United States tried to say they needed a backdoor into every single communication and piece of information that was on the internet, which would have killed the internet completely. No one would be able to use credit cards because eventually that backdoor would be hacked or something. No one would be comfortable sharing information. You would not be able to have, Signal, WhatsApp, credit card information flow, Bitcoin. You couldn't have anything on the internet. And so what happened is the industry that was building out the internet, I don't know exactly what it was, but, let's assume Yahoo, companies like that, they went to Congress and they said, hey, this is a really bad idea. And let's show you why it's a bad idea. And so I think with any kind of new technology, you just get regulators who, now I think the average age of someone in Congress is something like 70. It's something astronomical like that, where, maybe you should have term limits, and we can discuss that on another podcast. But when you get old people and these brand new technology innovations and the headlines they read are Sam Bankman-Fried steals billions of dollars, and they don't really see a lot of other headlines, they just get scared and they go, oh, well, we should ban this thing. We should ban these things. Some constituents of mine called me and said, we need to ban this. So let's ban it. And what happens instead when you get BlackRock wanted to issue an ETF and you get PayPal issuing a stablecoin, companies that, people have learned to trust over the years, they start to be the ones to go to Congress and say, hey, we need to figure this stuff out and you need to listen to us because we actually know what's going on. And they have the political capital and the monetary capital to actually get through to politicians. And so I think, any development where any kind of big established company is starting to use cryptocurrency or operate to their clients or use security tokens in any way, I think that's very, very positive and similar to the early internet where, the US government literally tried to ban encryption, but luckily didn't after some thoughtful insight from market participants.
We got the Canada out of you as well. You said out.
yeah, of course.
To wrap this up, what do you say in terms of Polymesh? What are some of the more exciting opportunities and potential challenges that you're seeing in the next 3, 6, 12 months for you?
Yeah, one really cool thing that we did recently is a top 10 stock exchange issued a carbon credit on Polymesh. So we're under NDA. We can't discuss the name of that, but that's been a really interesting development recently where a lot of the concerns around using blockchains or securities has been from institutions being worried about things, about data not being private. And so, on a public blockchain, people can see whatever you're doing, but institutions want other people to see what they're doing in terms of carbon credits. They want people to do what they're seeing in terms of green bonds. And so that information they're actually comfortable publishing. And so that could be one really huge use case where blockchains really start to take over and gain a huge amount of market share. Additionally, because, where do you go to trade carbon credits today? I don't know. There's not really an established market where everyone goes. However, when you look at where do you go to trade public stocks today, you go to the NASDAQ, you go to the New York Stock Exchange, you go to your brokerage account, and those are very well established and understood paths. But for new assets that haven't really existed before, carbon credits, green bonds, tokenized real estate of something in another country that you didn't really have previous access to, these new markets and new instruments are really exciting places for blockchain to really take shape because they can become the dominant players in terms of where liquidity ends up.
Love it. Well, thank you for coming on, Graeme. You are the first of many amazing guests on the Blockfuel podcast. But as you mentioned, we'd love to have you back in a few months and see where your head's at with everything.
Thanks, Seth. Really appreciate it. It was fun.